Let's start with Mr. Ajay. Mr. Ajay, can you hear us?
Yeah, I can hear you.
Great, perfect. So let's start with you. I've already given the introductions and we've all met each other. So, and I hope the audiences have also met us. So we'll start with our first question, and what we want to talk about first is the B2B banking and the digital banking, which is around the world. So what are your views on that? How do you see the customer expectations and how do you see it going?
Thanks, Olani. So I think if when you talk about the digital banking across the world, I think we can't treat all the geography and as well as all the segment of the customer in one way. So different customer segment has different expectation. Since different geography has different requirement, or maybe like a different a preparedness. So if you look at Africa or rather African countries, they were quite advanced in the terms of mobile banking. When you look at the India or China, the India and China probably are much advanced in terms of digital banking compared to maybe you can say America, right? So there are different geography has different needs, different controls. When you talk about the customer segment, so maybe like the younger segment, the new generation, they all want everything digital. They probably are, like some of them are certainly, want the digital banking, but some of them are still, like want the physical banking. They want to touch and feel kind of banking. And then, you have the mid segment where, you have the mix of the client. But if you talk about the future, then future is of course digital. So client is more and more expecting the banks to, deliver digitally, especially, like after this COVID scenario across the world, the expectation from the clients as well as the requirement from the banks has become more. So now you can do the KYC digitally. The payments was happening digitally all the time. The global payments are happening all the time. So you can open the bank account digitally. You can make the payments. So like I have not seen the checkbook for last I don't know 10 years. I've not used the checkbook at all. Now once in a while somebody says, "Hey, can you give me a check?" I said, "No way." So we use mobile banking. You can, like in India, you can make the payment through Paytm. In UK, you have, like what we call Pingit or Paym, where, like you will make the payment on the mobile. This is, I'm talking about retail. So, like in retail, you have the loans, which you can do digitally. You can have the savings account digitally, current account digitally, all the investment digitally, right? Now, coming to corporate banking, I think the world is a bit more complex. So because of the complexity of the corporate banking requirement, while more and more banks and more clients are moving to digital world, but there is still a large segment which is still not like moved completely. It's some on the way. So like if you talk about the trade finance, physical documents requirements, especially bill of lading or like maybe some certificate which is issued by the government authorities. So there's so many parties in the trade that not all of them are moving to digital. But then you see the changes are happening quite fast. So we are moving to EBL, we are moving to e-certificates. So all that is happening. There are fintech companies in the market who can do the doc checking by converting the physical document to using the smart OCR. And do everything digitally. So we are looking at, even for the corporate, we are looking at end-to-end delivery of letter of credit, probably in a matter of minutes, maybe trade finance in a matter of minutes, a presentation of document by the beneficiary and receipt of the document by the importer, probably in a few hours. So all that is in work in progress. But if you look at the corporate world, I think there is still work to do, and while all helping or work all supporting, especially the new fintechs who are coming without any baggage. So while the big banks do have some baggage, because they have to abide by all the rules, all the regulations. They are present in different countries. They have to apply all the different compliance regulations. Where the fintechs are much more leaner, and they can like leap forward without much of their baggage, which maybe the traditional bank may have. So fintechs are helping a lot in moving to the digital corporate world. And I think the future we will see is everything is digital. And actually, I'm imagining that probably will not even the credit cards or debit cards in physical format. So maybe, like our digital, we may have a bio card. So like, if you want to make a payment, you just put your finger and you make the payment. So like compared to Apple Pay, where still, use the mobile to make the Apple Pay payment or Google Pay payment. I'm saying without any mobile, without any cards, there will be a world where now you can just show your maybe retina scan or maybe your finger scan, and the payment will happen from your account. So that's the kind of world, or that's the kind of future I look for the digital banking. But I think and then I think running quite fast in that direction. Let's see that when we'll do, maybe 5 years or 10 years. That's the kind of question we may have.
Yes. So, and we look at meeting our customer expectations soon. It may be a little longer than expected, but yes, you do see the future going completely digital.
Absolutely.
Okay. Anyone has anything to add to this point, or anything else they would like to kind of talk about, like B2B banking, digital banking? Or if not, then we can go to our next section, which is we talk about, to Ms. Jillian, what we're going to talk about is the usability of digital currency, which includes cryptocurrency, and how do we see it disrupting the banking industry?
Thank you very much for having me here today, Selena. And thank you, AJ. That was a very broad and comprehensive view of digital banking. And I think it's true. I mean, it has to be digital. We can't go backwards. I think COVID is fast forwarding that too as well, because increasingly in our shops, we're not allowed to use cash. Shopkeepers would prefer we all went digital. And I think the interesting thing is, while it's all going digital, I think there's two things happening. With the advent of blockchain, we get around the problem of double spend, so we can actually create things which people will be aware of cryptocurrency, starting with Bitcoin. So there is a need for it, because the old systems, although they are moving forward, they have baggage. They actually have a lot of baggage. We saw that from the report with the FinCEN files that were released in September. Over $2 trillion worth of laundered money going through the main banks, including my old alma mater, JP Morgan, had $1 billion went through a London account totally anonymously. So they not only have baggage, they don't do a lot of things well. And AJ did mention that in different geographies have different sort of acceptances. And it's true, because obviously developing countries leapfrog, because we see in the African continent, no one has a landline. They don't have the telephone. They went straight to the mobile. And the same way, it makes sense to have digital currencies. While I would argue why cryptocurrencies are better in the large than digital banking, traditional, one is, I mentioned FinCEN because that's so interesting. People say, "Oh, cryptocurrencies, they're all dark net, it's all dodgy money." Not really. It's in fact, it can be a lot more transparent, because if you have an address, you can see where everything goes. But if you think back to it, with traditional banking, when people send remittances back from the developed world to the developing world, which is the largest flow of money I understand in the whole world, it's this amount of small but huge volume of remittances. We all know the fees are huge and the time delays are massive. So it makes sense to leapfrog. Cryptocurrencies offer a number of things. The transfer of value, which is really important, without intermediaries, that is a huge game changer for this world, because the banks have sat on the movement of monies and have been, the custodial of monies, and not very well. I mean, they haven't been accountable and transparent. And what's happening too, so the first off, people can transfer money, and they are doing it via their smartphones. They transfer value. But also, increasingly, if anyone's following the cryptocurrency space, there's a huge interest in decentralized finance. And what's interesting about that is that, okay, to transfer value is very important, and that's a C2C thing, if you like, or a B2B thing, but it's very important. But we also need the other things. Why do we need banks? Because they offer credit and they also offer interest. And these are coming through at the moment. It's very turbulent at the moment. It's all very new, but it's very disruptive, and it's very much watch this space.
So you would say that you see cryptocurrency being better than the traditional digital banking in the future sometime, and the disruption of the banking industry will happen. Anything else would you want to say? Like, why would you advise corporates to maybe shift to digital currencies compared to digital banking? How can it be maybe worked on better? Anything to that?
It's still very much a nascent industry. So there are lots of issues, including complexity of moving money. The concept that if you use cryptocurrencies, you are your own bank, which means you can also lose your own money, which is obviously not something that corporates want to do. So I'm not saying it's a panacea for everything right now, but it's moving. And I think we'll see in the developing countries it moving much faster because people don't have their own currency is not worth anything. They can't transfer monies. And it's the banking industry has brought it on itself because they haven't allowed transparency. And I say that FinCEN files just shockingly shows what happens with the current system, the centralized financial systems, of which I am very critical. And I think that cryptocurrencies can I'm not saying they're going to replace fiat money. That's not going to happen straight away. I think it will long term. I definitely think it will. I think in my children's time they'll see it. My kids are grown up. But yeah, it's no harm. It's no harm. Let's have some transparency. Let's shake it up because the financial houses they've been controlling the world without much control. So I think it's a good thing.
Great. So yes, that's
really interesting point on the digital currency aspect of it, and I sort of agree with some of it and disagree with the other. So yes, in the world that we are moving to digital, the digital currency is one of the instruments that is happening, is coming to the market, and it's probably unavoidable. I would argue that cryptocurrency is still undiscovered space from two perspectives. If we go under the bone of the money element, there is a currency element, a fiat element, and who is backing it, and who holds responsibility for it, i.e. central banks. There's element of the rails that used, and i.e. Payment systems, and then there's an element of the other banking system attached to it. So it's there's three individual buckets, and their kind of development of that with digital influence as well as with the COVID influence is going slightly different trajectories, and they're not necessarily fully in sync. So if I address like one by one, I think digital currency has opportunity to develop even more actively. But crypto today is not protected, not by regulation, not by governments, not by any central bodies. And also what goes into crypto is not necessarily known to the regular consumer. But there are other alternative models of digital currencies are being created. For example, there is one fintech that is emerging and growing, offering bank account into digital currency fully backed up by gold. So that gold is one of the most liquid assets, and the value of gold is not fluctuating as much as the other assets. And in that is very clear what consumer has access to in terms of the protection of their money. So that's one of the examples that could emerge. So digital currency to me is not only crypto. The other element is payment rails and how the payment rails protected. Interesting, Ajay mentioned that cross-border payments are already digital. I would challenge you on that. Cross-border payments are automated, but I don't think they're digital. The cross-border payment takes about 10 days. It's a 10 times more than the domestic payment. So the domestic faster payment, for example, and the cross-border payment is 10 times more expensive. 10 seems to be a magic number compared to domestic payment. So would the crypto or a digital ledger or existing payment rails offer opportunity to move payments, to move money in much more transparent and much more quick and efficient way, and cost efficient, because to the end user, it's a 10 times more compared to some of the domestic faster payments. But also, what is the fraud protection into that? It's quite well known that faster payments rails are not fully protected from consumer perspective versus card payments, for example, or versus other type of payments. So I think digital currency definitely has something to say to our kids, but I'm really not convinced that crypto is the only option if we don't govern it properly.
I think that's part of the beauty, though, isn't it? Because two things I just pick up on you, and we are largely agreeing in different ways. Whatever. You mentioned gold backed. Of course, no fiat currency is gold backed anymore. It's only backed by the government that props it up. Central banks.
That's alternative. I didn't mean that fiat is gold backed.
I thought because people chuck that in and they go, "What's it backed by?" Whereas Bitcoin is maths. It's an algorithm.
Absolutely, that wasn't. I just want to make sure that I clarify that point for the audience. I was not referring to gold-backed digital currency as a fiat money. It is something alternative or existing alongside. And by the way, the name of the fintech that is developing and has the banking app in UK for customers is Tally Money. So if you're interested and you're based in UK, do open bank account with Tally Money and see it for yourself. But you literally have your digital currency fully backed up by gold, and you could transact it through the current UK banking system. You can pay and save, and also it's convertible to fiat, and you are not incurring any transactions fee, and you're also not incurring any foreign exchange on that. It goes straight equivalent to gold. So that's just to make it clear, it's an alternative to fiat, and it's convertible with fiat rather than fiat backed by gold.
Okay, thank you. Just sometimes that's thrown about people who are not familiar with cryptocurrencies. They go, "Oh, they're all dodgy, and fiat's backed by gold." And of course, it's not, since Bretton Woods and Nixon in '71. Anyway, yeah, good to clarify.
Saloni, you are on mute.
Mr. Ajay, I think you want to say something, and I think your mic is off. I think Mr. Ajay, your mic is off. We can't hear you. Okay, I'm sorry. I can't. Okay. Hello. Yeah, Mr. Ajay, we can hear you now. Would you like to add something? I think there's some network issue. I'm sorry. Catherine, Daryl, would you like to kind of add anything to what has been mentioned? Do you agree? Do you disagree about cryptocurrency, blockchain? Catherine, we start with you. So, what do you think about blockchain, digital currency? How do you see the customers or the corporates using this in their day-to-day life and in their day-to-day businesses? And how difficult would it be, or how easy would it be for them to use this? I think your mic is off. I think, Catherine, we can't hear you. Sorry.
Catherine, you're on mute. Can you unmute yourself?
Should be the bottom on the panel on the bottom. There should be a mic to click on or off.
We still can't hear you. Your mic is still off. Catherine, I would request if you could just maybe refresh your page. Yeah, I think. In the meanwhile, we will go to Mr. Darrell. So, what are the emerging technologies you see, like blockchain, digital currency? Do you think there's anything else which will come up, which will make banking easier, or which will maybe take over from these current banking technologies?
Yeah, thank you, Saloni. Thanks for the question and thanks for having me. I think blockchain is definitely one of the key technology with impact on how banking and the financial sector will develop over the next years. Blockchain has already started to transform many facets of banking, either directly through the bank or through fintech. Globally, applications of blockchain is wide-ranging. Well, earlier Gillian and Lana talked about cross-border payments. You also see that it's used for KYC purposes, for trade finance, and can also be used for modeling credit scoring. So there's a lot of potential applications of blockchain, at least in the financial space. Maybe as a recent example, in Singapore, 14 banks have come together to start a blockchain-based trade finance registry. And the registry, it's aimed at tackling fraud in the trade finance industry. Just this year alone, in 2020, there were several high-profile fraud cases with commodities traders, created losses in the billions to market participants. And I think the use of a blockchain-based registry is a step in the right direction to try and reduce fraud in the industry. One other application of blockchain, which RJ talked about earlier, it's for KYC. Thomson Reuters did a survey. They found that compliance KYC cost for a bank average up to $50 million per annum, and you could be going up to the hundreds of millions if you include anti-money laundering and customer due diligence cost. I think blockchain has the potential to improve the KYC processes. It can reduce some of this compliance costs. Blockchain, of course, it's transparent. It builds on trust. It allows some of this information to be shared in a very secure manner. But of course, with banks, I think there's a lot of legal and privacy issues. So to one of the points that was mentioned earlier, that you see financial institutions tend to be a bit slower when it comes to implementing some of this technology. I think one of the interesting thing that through blockchain, that has developed, or one of the product that has developed, is the use of blockchain to issue a bond. World Bank did that with CBA back in 2018, where they issued a bond on a private version of Ethereum. It's in its infancy stage, as Ajay had mentioned earlier, and I think it's a good first steps for banks to try and build on the use of technology in the corporate space. I think other banks like SocGen and Bank Santander have subsequently also issued bond on the blockchain network. Yeah, I think besides blockchain, some of the other technologies that will continue to impact banking includes the likes of artificial intelligence and machine learning. AI has been used already in various parts of banking, and I think over time that usage of AI and machine learning would just continue to increase. It is used by banks in middle offices function to detect and prevent fraud, to improve KYC processes, improve regulatory checks. From a client perspective or consumer perspective, you see it being used in chatbots. AI is also being used for analytics with the use of big data. It's being used in, say, for example, program lending, where banks would analyze a huge amount of data to make credit models, to make credit decisions. So I think these are some of the technology that are being used by banks, but one of the challenges still, which I mentioned earlier, is that banks are not as nimble as fintech startups. And that's why you see that a lot of fintechs are moving much faster than banks. And you see banks trying to collaborate with fintechs to try and develop some of this space. But I think there's so much more that banks can do and that technology will continue to drive
sometimes it takes a while for it to
going forward.
Yes, you're on
Okay, great. Thanks.
Sorry, Catherine. That's a very interesting overview of some of the examples how technology could be used. But I think I would perhaps suggest to consider it from it's not that we have the school technology and we're trying to find the use case. I would suggest to look back from what is the fundamental challenge of the financial services today. And in order to do that, I suggest or I remind you to have of how it was developed. The financial services system of the past was really based on the distribution of localized assets. And what we've been doing for the past few decades, we've been automating parts of it with the point solutions. So some of those things are very interesting technology applications, but still very much point solutions, where fundamentally there is economic problems that exist in the financial ecosystem today. And that economic problem is income and the cost ratio is a productivity challenge. The traditional banks with basically with a drop in the interest rates and with a challenge by different business models that coming from fintech, because it's not only being nimble, it's not only coming with a new tech tool, is actually fundamentally coming with a different business model. So the problem of financial services is the fact that customer acquisition is about $350 per customer, and for non-lending customers, the lifetime revenue is about $250. So there is no way to actually grow financial services with the existing models where compliance and risk are standalone functions, where it's not embedded in the, integrated with the design of the business of organization, where P&L owners are still very silent and isolated, and there is no incentive to cooperate and collaborate internally. And to me, all these technological advances have opportunity to redesign that business model rather than address point solutions of what we've been doing for the past 2 decades. So, for example, the payment rails and the business models such as bank as a service model, it introduces the opportunity of much more seamless infrastructure and plumbing in the banking world, and making giving opportunity for others to serve the customers much better. But traditionally banks, they still do a few things very well, and I don't think fintechs cracked that challenge yet. One, the lending business, banks are much more successful in that because lending is not about giving money; it's also about collecting it back. And safety, the trust and safety in, I think the traditional banks are still keeping the brand, and all the deposits that we have, we wouldn't save our money with fintech. We likely go invest or save with traditional banks. So I think there are definitely rewiring on financial services happening. And what Ajay mentioned about the digital of the future, yes, definitely, I completely agree with him. But I think it's not a matter of just digitizing what we have today. It's rewiring the financial ecosystem as well as the business models individual organizations and also the collaboration. I think what new tech gives us, and I quite like your KYC use case, Daryl, it gives us better interoperability. It gives us a better opportunity to harmonize some of the activities that shouldn't be commercial. So fighting fraud and financial crime is not a commercial issue. And there are technologies and there are some solutions like KYC register from SWIFT, for example, that gives that opportunity to collaborate for the ecosystem, regardless whether you are fintech or traditional players. So to me, just to recap, the rewiring and business models on the ecosystem level, cross-border, as well as internal in organizations, is what I would expect as a major change in the industry in the next few years, really influenced by customer, by economics, and using the new technology tools to address that.
Just to, thanks for that. I mean, I agree with a lot of what you're saying, but just to add to it as well, I think one of the big issues or differences between big traditional banks and fintechs is how they connect and relate with their customers. So big banks traditionally have not been very accessible for most people and business owners unless they have a very good understanding of the financial world. One of the great things that fintechs do is they break this down to make it more accessible. So if you look at how they traditionally talk to, how big banks traditionally talk to customers, this tends to be very jargon, tends to be very dense, very hard to understand, very dry, very boring. And then if you compare that to how fintechs talk and relate and educate their audience, it's very playful, it's relatively easy for most people to understand, and it kind of breaks down that border. Now with fintechs rising up and kind of starting to disrupt the space, one of the really interesting things that you've seen is that traditional banks have started to change their branding and their messaging to make it more relatable, to make it easier for people to understand. Regulators have put in regulations in place that, things need to be written in plain English. So to add to your point, one of the things that I think, will change over the next 5 to 10 years is that big banks will have to take customer relationships a bit more seriously than they perhaps have in the past, and will need to make banking accessible to everyone if they want to continue to compete against fintechs.
That's a very good point, and I just and you are spot on that. The customer-centric experience is critically important. I would expand it a little bit further. I don't think it's only fintechs that would have relationship with customers. So there is another emerging fintech movement as a bank as a service model. The bank as a service model that offers the banking rails or banking pipes to other non-financial services firms. It brings customer experience that when I go shopping, I'm not thinking about payments. I'm thinking about what I'm buying. Bringing that element of the payment transactions at the end to the corporate brand that serves the customer. And that traditionally is way more customer-centric. They know how to offer you the customized option. And I think COVID actually influenced a lot of that, because that, as we are spending more time at home, more of the things that would happen on the high street happens from home today. Or has to happen from home today. So actually combination of this new novel relationship and movement, what we call embedded finance, using solution as bank as a service, really nurturing and leading that and expanding that boundaries of financial services to others for the benefits of serving customers, serving consumer. And so also some of them as emerging fintech which less legacy of not only technology, but also of the organizational cultures. They have opportunity to design it better, to design it global. When I promise practical examples to people. So one of the bank as a service solution is Rails Bank. That is one of the largest fintech today. They grew significantly because they're able to offer that traditional banking and payment service on to others in a very simple customer-centric way. So fintech and corporate brands can serve those customers. So understanding that options that exist in the ecosystem and those new novel relationships, that is very important. But also what we're learning that as we're rewiring financial ecosystem, how we interact with each other as a corporates, as the banks with fintech, and how that kind of mutual understanding happens. That's very important as well, because obviously there are very few cases that are not that successful over the past year, which I'm not going to name and shame. But I think that's a great opportunity for that customer-centric experience. And yes, challenging the traditional banks, maybe some of them step up, but I don't necessarily expect that everybody need to, because there is also opportunity to stay with a niche and do what they do well, i.e. lend, i.e. provide that trust and safety for the savings and deposits. And if I quote Gartner prediction is that 80% of heritage financial services would be relevant by 2030, which I tend to agree with it.
Yeah, I mean, I agree as well. I think especially as the younger generations get older, there's quite a lot of interesting research into how millennials and even younger feel about traditional banks, and quite a lot of this research says that they would feel safer giving their money to e-commerce giants like Amazon than they would giving it to a high street bank. So especially as the older generation gets older and the younger generation moves into roles where they have money, they start to have more of a expendable income and have some freedom there in terms of finances. I think that's going to continue to disrupt the marketplace. When we're looking at the next 5 to 10 years, we also have to consider the fact that millennials and Gen Z will be quite established within the marketplace. They'll have careers, they'll be successful, they'll have money coming in, and they'll have money to spend and play with, and to decide who it ultimately goes with and who they bank with. I mean, even in the last couple of years, we've seen neobanks like Monzo and Starling and Tide become quite commonplace within even the business world. So it's not uncommon for a business owner to do their banking through Tide or Monzo or Revolut, where maybe 5 years ago that would have been quite surprising for an accountant to work with a business who was using a purely digital bank. So I think we're only going to continue to see these trends as we move forward.
Yeah, definitely. I tend to agree with that.
I would like to continue, like, a question for Catherine in continuation with this. Would like to know that what would you think would be the marketing efforts which would need to be made to kind of get everyone to educated about these new technologies, blockchain, digital currencies? So what do you think that steps need to be taken for that?
Definitely. I mean, I think there's a lot of educational work to be done. I was looking at some research earlier about what was preventing blockchain from mainstream adoption. And there's two really common problems that most people are facing when they look to bring blockchain mainstream. The first is regulatory issues and distrust around whether or not blockchain is safe. And the other one is around consumers and whether or not they think it's safe. Blockchain was developed for Bitcoin, so it has always been associated with cryptocurrency, and not everyone realizes the value of blockchain and the technology and what it can do. You know, only about half of the blockchain use cases are within FS. The rest are within, you know, manufacturing, healthcare, locations, logistics. There's so many different use cases for blockchain. So I think there's quite a lot of educational work to be done here. So we saw it with open banking. Open banking, you know, when it first came onto the scene was quite disruptive. People were really like, whoa, what is this? And it took years of campaigning and educating the audience to get it to become, you know, what it is today, where it's become relatively mainstream. So, you know, I was talking to one of our clients who's a blockchain provider the other day, and they had this great line where they're like, we just want to make blockchain boring. You know, we want to make it so common, so commonplace that people don't even find it disruptive anymore. You know, that it's just like using an online accounting system, or it's just like using the internet to do your shopping, to do your banking. You know, it's not revolutionary. It's just boring. So, I mean, that was a really great example of where blockchain will probably go in the future. You know, people want something that's just going to work rather than something, you know, that they have to figure out exactly how it works. So when it comes to marketing and educational content, you know, you really want to be thinking about where those knowledge gaps are and how you can fill them. So, you know, that requires looking at your audience, because, you know, if you're geared at millennials or even at more technical people, they're going to have a different understanding than people who are perhaps older or don't have the same background. So all marketing really starts with the customer and looking at, okay, who are they? What do they already understand? What do they need to understand to be able to grasp the value that is provided with blockchain? So, you know, when it comes to marketing, I would start by looking at the customers and, you know, your target audience and what they understand, what they don't understand, and then creating a content strategy, a marketing strategy around them, so that you can fill some of those educational gaps and help bring them up to, you know, the speed that some of us on this table are definitely at.
Could I just jump in here as well? Sorry, just want to say that blockchain as a technology actually developed in the 90s, and then Bitcoin was the first, you know, big use case that everybody knows of with the cryptocurrency involved. But I also want to say too as well, I totally agree with you, Catherine. Blockchain will become boring in time. It's very exciting right now because of the potential that it offers. But in time, it'll be like the internet. We don't say, I'm going on the internet. You know, I'm not going to use HTTP or whatever. We go on to, we do something. We do the function we want to do. And that's what will happen. And the last thing I want to add in, because I'm not quite sure how much time we've left, but the one thing I do want to add in, you mentioned about the new banks and fintechs and everything. But what's interesting about what blockchain, I think, is pushing through is a better way of looking at the world. So someone mentioned earlier about serving its customers. I genuinely do not believe that the financial institutions serve their customers currently, and certainly not properly. But this is a way that there's a lot more thinking. A lot of the ethos behind the cryptocurrencies and the blockchain is let's make the world a better place. And it's not hippy dippy stuff. It's let's make the world a better place. So that's my finishing point.
Yeah, definitely. I mean, I totally agree. Sorry. Yeah, I totally agree. I mean, it's about making the world more accessible. So not even just a better place, but a place where people can understand and their finances and can access these financial services that, you know, were traditionally and historically reserved for the very wealthy and the elite in society. So, I mean, what I see and why I love fintech is because they are, like you said, making the world a better place, but also making it a fairer place. Making it a place where business owners can have the same access and the same support as, you know, a multi-million corporation.
I quite like the internet example, right? And I would build on that. So the internet became viral when it became ubiquitous and it was solving particular problem. And so is Google, and so is Apple iPhone, right? So the marketing and education, to me personally, starts with the product. When developing the product, when you really focusing on the customer and you solving the problem with the customer, No consumer ever said, I would like iPhone, or not business owner ever said, I would like a smartphone, right? So they really, they niched addressing the problem that actually for the user to start using it for their own purposes. And then it becomes a viral effect. If it's accessible, and if you say to your friends, to your family, or such a great tool, and it kind of goes further through the network chain. So to me, the education comes with the product. I mean, as well as the marketing. When you really creating product with a customer in mind and solving that problem. So when we forget about blockchain and start thinking what problem we're solving, that's where it will become ubiquitous, and that's where it would become viral and accessible.
I mean, 100%. I mean, good marketing should start with customer pain points, because that's how you position a product to be, you know, a headache reliever rather than a vitamin, you know, something that people have to have.
Sorry, Catherine, I think you start creating product with that. You don't create a product and then market it. When you think of creating products, that's how Google was created. That's how iPhone was created. That's all the things that we are so embracing so easily was creating, right? So if you are creating product because you like your tool, without marketing, without understanding the customer, without pre-marketing activity, you know, and then you engage with marketing after product created, you're already on a wrong path, right? So that's why the marketing and understanding the customer comes right from the product.
Well, yes. I mean, everything should come from the customer. So, you know, when you have that initial idea, it's looking at what the customer pain point is and the gap in the market and why your solution is needed now. And that then translates, or should translate, into your marketing once you already have a product available. Obviously, you can't do marketing if you don't have a product, or you can't start with marketing and then build a product. But what happens a lot is that people forget about these things. So they build a product and they get so consumed with the features and everything that it does that they forget to translate, you know, these initial ideas and these initial pain points and these initial opportunities that they saw. They forget to communicate it almost, you know, it gets lost in all the sleek interfaces and the groovy, you know, features that the product offers.
Yeah, so I think that's really like informative to know that. So I actually have a question for Mr. Ajay Kumar out here. Can you hear us? Yeah. So I just wanted to know that based on all we've discussed, how do you see the banks adopting blockchain, maybe another newer technology? How do you see that converting into customers, and how do you see that customer base picking up?
So, you know, Saloni, thanks for this question. So I think we need to understand that the blockchain as a technology is not the same as cryptocurrency, right? Now, that's first thing I wanted to say, and then I'll expand on that further. But before that, I'll answer your question in terms of the banks. So look, the banks these days are quite, you know, like I'll say agile in terms of adopting technology and implementing technologies for the benefit of the customer, and also for becoming more nimble and slim and be able to serve their customer better. So while I did say that there's a difference between the traditional bank and the fintech, but remember that there are so many, you know, obligations on the bank in terms of the compliance regulations that probably is not applicable in the same way to the fintech, right? So if you look at the bank itself, and any bank I'm talking about, any bank in any country, each one of them are quite aggressive in terms of adopting the technology. So if they can't adopt technology directly, they are also funding, investing in the fintech and do that for them. So not only the fintech itself depends on the traditional banks for their, I'll say, I won't say survival, but for their, you know, progress and you know, I think making, you know, the huge progress. At alone, even fintech won't be able to do much. So if a fintech wants to do the funds transfer, they still need the backbone of you know, traditional bank to actually make it happen. So the banks in that sense are quite agile, quite advanced and are working in a quite very fast pace in terms of adopting technology. But yes, the size and the compliance requirements and the regulations in the different countries does have their own bearing. But and having said that, I think they are very much like in the race. That's one. On talking about the blockchain and the cryptocurrency, I think we all talked about blockchain in a big way. And I think blockchain as a technology has lots of I think possibilities, and it will make lots of I'll say solutions like when we talk about the KYC which I was talking about. So those kind of solutions much more easier, faster, and secure for the customer as well as the bank. Now, many of the people on the street, they think that blockchain and the cryptocurrency is the same thing. That's probably the more, I think because people only have used Bitcoin as a blockchain technology, which probably is not the fact. And my view, and I'm slightly different on this particular view, that cryptocurrency in the current format is not probably sustainable. If the cryptocurrency has to be sustainable, it has to be supported by the central bank of the countries or of the World Bank in getting getting the cryptocurrency, right? So cryptocurrency from the say Bitcoin or maybe any from the private originators, in my view, is not sustainable, because not only there is no probably backing, it is very like speculative, and also the use of current cryptocurrency is not in the mainstream. It's more of like probably in the parallel economy is happening more, and that's why if you see the Bitcoin rates increasing to a tens of thousands without any backup, that probably is the reason, because like it's running on the parallel economy, not on the mainstream economy. So in my view, cryptocurrency to be successful must be backed up by the central bank and the World Bank to be of the mainstream.
I would like to come back, Ajay, to your point about the banks and their access to their payment transactions. So, yes, I agree in terms of the traditional bank challenges in the regulation respect, but I think that's where opportunity lies in the transformation programs. And if transformation programs really goes under the bonnet and the structure, and not just implementing new technology, but considering what the new organizational structure and effectiveness would be. And when risk and compliance really start playing not a separate role, but kind of standing alongside the product, alongside the technology transformation, that's where the really change happens. But also the fintech are not the only ones who are actually serving direct to consumers or direct to SMEs. The fintechs as a bank, as a service model, they are direct participants to payment schemes, to SWIFT, to card schemes. And if they have that direct participation license, but they're not necessarily lenders, they're a non-bank financial institution, they really focusing on those managing money movement and keeping them safe. Their application of the regulatory, they still responsible for compliance and regulations, but those licenses are different, and therefore cost of the executing that responsibility is slightly different. So that's where the opportunity lies, not just to drive the transformation of the sector from just technology perspective, but whole business model perspective, whole strategy perspective, whether you are a new startup creating your business or where you are transforming traditional bank. And looking at from licensing point of view, from strategy point of view, as well as operational design, that's where economics really start to make sense. And that's where the pace of change happens. And I think that's where, with all this digitizing, that's what I expect to see, that instead of trying to do everything, the organizations start to focus on what they're doing good. And the interoperability through the regulations and through the technology of those elements will really give the best of breed service to the customer.
I just want to jump in.
You're right. There are lots of, I think the complementary, positions between the traditional and fintech banks. They can work together. And you talked about the regulations and all. And yes, the regulations are certainly different for the fintechs and the traditional banks. And I think it will, in many cases, I think the fintechs are showing the path to the traditional banks. But what my point here was, the traditional banks are adopting the technology very, very fast. In some cases, they are absorbing the technology. They are probably, acquiring the fintechs, or they are supporting the fintechs. So it's a kind of, is I think a scenario where both can coexist and can complement each other.
I was going to jump in. As we've been on air here talking, Reuters have just announced that PayPal is going to accept cryptocurrency buying and selling next year.
That's actually a good thing to happen right when we're talking about it. Before we come to a question from the audience for Mr. Darrell, it says, are local regulatory guidelines creating speed breakers for banks to embrace the emerging technologies? So what would your take on that be? And anyone else would like to add to that?
Sorry, Saloni, can you repeat the question again?
So the question is, are local regulatory guidelines creating speed breakers for banks to embrace the emerging technologies?
Yeah, well, I think that actually differs from country to country. I think in some countries, the regulators are a bit more open, but at the same time, they need to protect the governance. They need to protect the interest of users or depositors. So depending on the kind of technology that you're implementing, the impact that it will bring to the society and to the users, I think the adoption of such technology differs greatly. For example, I think in Singapore and potentially in the UK and in many other countries, like fintechs, they would have regulatory sandboxes to allow new type of technology to be implemented. It's less valid for banks, but at the same time, there are certain sort of few where you can play around with to actually experiment on new technology.
Got it. Okay, thank you so much. Before we close this, would anyone have any closing statement to make, or would they want to say something, or because we're kind of at the end of our session?
So I think I'll just add to what Daryl said. So, the sandbanks are very important for the new technology to, pass the regulation in the local requirement. But, remember that most of the banks are multi-geographical in nature, and they not only have to, apply the local regulation, but they also have to apply the regulation where all they operate, and in many cases where their head offices are. So many of the banks who probably are supposed, American origin, whichever country they operate, they not only have to ensure that they are complying to the local regulation, they also have to ensure they are complying to the American regulation. So I think that's the probably kind of canvas we are talking about. And just as a closing statement, I'll just repeat what I already said, that the future is digital. The traditional banks are catching up very, very fast, and the fintechs and the traditional banks will coexist and will complement each other to create a digital world where everything will be digital and everything will be available to all customers, clients, and everyone in the society at a fingertip and much cheaper cost and in a much, I think, easier way. So that's probably I'd like to add.
I just want to jump in and just a quick parting word. Thank you very much for having us on here today, Saloni. I just want to say that I think people are often scared about cryptocurrencies because it sounds very dark and dangerous. And I'm in the middle of publishing a book that'll be out at the end of the month on about the people. So I've interviewed the people to explain who the people are and what their thinking is. So it makes it much more accessible. So if people would like to follow me on LinkedIn, please do so, and I will keep them abreast of my book. Thank you.
Yeah, just a closing word from me as well. Thanks for having me today. You know, I'm really excited for what the future holds, both in terms of fintech and blockchain. You know, and I think in the next 5 years, you know, we're going to see a world that's far more streamlined, where, you know, customers, whether it's a B2B customer or, you know, a B2C customer, are put in at the heart of banking. And, you know, we're a world where things are accessible and fair, and, you know, people can access the services that they need to be able to make better financial decisions for their business or for their life. Similarly, if you want to connect with me on LinkedIn, please do, or you can find me over at Twitter as well. Thank you, everyone, for having me today. It was lovely to speak with you a bit about marketing in the sector. Thank you.
Just to say thank you for having us today, and please do connect Writing Pen.
Thank you. Before leaving, I request each and everyone to join on the Hall 4. There are going to be an interview for you for the media bites. So request you to join Hall 4. Don't leave from here.
Yeah.
And thank you.
Daryl, do you have something to say before we close the session?
No, not specifically. Indeed, thank you for having us. It's a pleasure to be here, and very nice to hear the differing views about blockchain and the different technologies that's affecting the financial sector. Thank you, everyone.
Yes. Okay. Thank you, everyone, for being a part of this. And I think it was a really fruitful discussion. I would just request if you can just put off your mic and cameras and still be out here. They'll just play a short video, and then we can go to the media hall. If we can all just put off a mic and video. Thank you so much.